Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, August 27th. It is 6:25 as I'm starting the video. And as always, please run your video player at 1.25x to run through this material a little bit quicker, give you a little bit more efficiency. Overnight, we've had a moderate bounce after yesterday's soggy, heavy trading, probably due to all the geopolitical stuff going on in Afghanistan and all that kind of stuff. So we've bounced up a little bit. We're probably in a neutral state, compared to where we were Wednesday. Just looking at equities, up about 0.35%. Oil's bouncing a little, 1.4%, copper 0.6, gold pretty much flat. Really, the whole thing this morning is going to revolve around Jerome Powell's talk at 10 a.m. We do have a couple of macro data points. We've got international trade. We've got personal income. That'll be closely watched at 8:30. And then we've got at 10 o'clock, just as Powell is beginning his speech, we've got University of Michigan consumer sentiment at 10 o'clock as well. And remember, last week was the bombshell where that dropped, the sentiment dropped like 11 points in 1 week. It was like the biggest drop in 30 years kind of thing. That was, if you recall, that's when we had all those inflation prints and COVID scares and that kind of stuff. So it'll probably bounce back this week. I can't imagine it taking another dramatic dive like that, but anything is possible. And then rolling into Powell's talk, we had 3 Fed governors yesterday. I can't remember. I think I don't want to say. I know James Bullard, St. Louis Fed president, was one of the guys talking pre-market. He was talking pretty hawkish. I think they're really trying to set the table for an announcement. I don't think it'll be today. I think Powell will probably hint around at it, but I think then in September, unless there's some dramatic change with COVID or something like that would give them pause, I think they'd probably announce something about taper in the September meeting, and then probably start either October, November with a tapering process. So they've been communicating that pretty consistently lately. So that's kind of my base case. But you can find a lot of Fed commentary out there. I'm probably not the best guy to lean on as far as that goes. But I think it's just trade level to level, like we always do. I don't think any of us are smart enough to game the Fed from the standpoint of putting on trades for this or that based on Fed policy. I mean, if something breaks out, it breaks out. If something breaks down, it breaks down. I mean, you don't really need to know the reasons why. I think that in the end trips up a lot of people when they try to link events to moves on the chart. So anyways, I want you to make sure you get out a pencil right now. I'm going to depart from my normal format and just give you some tickers to look at today. First of all, we had yesterday, after the bell, we had a few marquee names reporting. Peloton is down pretty significantly. I think it was about 8 to 10% last night after hours. So that'll be an opening gap today if you like to trade that. Same thing with Ollie, the discount retailer, ticker OLLI, Ollie. It's down as well. And then Workday had a gap up yesterday. So those will, regardless if you want to trade those today, they'll set up for bracket trades beginning on Monday. And so those would be good ones to add to your list. Big liquid names that have good option chains that you can get good fills on and that kind of thing. Also, we have a name reporting this morning, HIBB Sports, ticker HIBB, B as in boy, HIBB, Hibbard Sports. And if you go to the chart, it's just approaching 100. Okay, that century mark par, we traded that to good effect on AMD, crossing 100 for the first time. Now, just coincidentally, there's earnings today. So if you look at other names in the group, you've got Dick's Sporting Goods, DKS. If you look at that chart, there's a nice bracket trade right there. It gapped up on earnings the other day. And so there's a nice bracket trade available, all set up right now on that one. You've got Academy Sports, ticker A, S as in Sam, O, ASO. Is trying to break out right now after a little pullback. I like that ticker. And then there's also a name in the group, Big Five, B as in boy, G as in George, F as in Frank, V as in Victor, Big Five Sports. The chart is not as compelling as the other three, but I think as long as you're looking at that group, you might as well put Big Five in the in the mix. So I think all three of those are going to be nice opportunities. HIBB, Dick's, and Academy Sports. I think all of those are setting up well for potential opportunities, and we'll track them going forward after HIBB reports this morning. And if it's as strong as Dick's, then it's going to gap up over 100, and then we may be off to the races there. So let's get into the indexes and the FATMAAN names. If you're new to the group, I really appreciate your time this morning. I'll encourage you to jump over in the show notes where you can drop in your email on the website and register for all my content. That will be great. And also, you'll get an invite to our trading room that continues to grow almost each and every day. We get some new people. It's become quite dynamic. We've had a couple of recent additions to the group that seem to be active and sharp traders, so that's great, adding a lot of value to the room. So I really appreciate that. And of course, longtime subscribers, I really appreciate your support and you passing the link along to help me grow the audience. So let's go through our standard pre-market setup with the caveat knowing that Jerome Powell at 10 o'clock may set things either off to the races or have a downtick before the weekend. Equal weight SPY had a little pullback yesterday, but still basically at the highs. Remain cognizant of the fact that we've got bearish divergences in place. Those are yellow flags. Nothing to tell you to bail out. But we are still here at the highs. Yesterday, here was the soggy trading that we had talked about. I think this morning, and I think we're already trading above 447, but I view that as the pivot on SPY 2-hour chart. And then if we can pop 448, we'll be back above the midpoint line of the channel, and that would open up a move into the low 450s. So use 447 today as your pivot, and then if there's a downtick, I think you'll see a little support at 446, and then you've got the gap at 445, and you can see those levels here a lot more clearly. Just, soggy trading all day yesterday, and I don't think you really read a whole lot into that other than, terrible news casting a little bit of doubt over the market yesterday. So now we'll get back to trading fundamentals and macro and all that kind of stuff here ahead of the weekend. And remember, the last 2 hours of trading, 2 to 4 on a Friday, are always really important. Why? Because it's a good gauge of risk sentiment heading into the weekend. Who really wants to be long? For instance, God forbid anything else happen, in Afghanistan over the weekend, and then, do you want to be neck deep in longs heading into a Friday afternoon? You'll have to answer that question, as do the rest of the market participants. So that Friday afternoon sentiment is a good kind of read on where people's heads are at. And if you see a strong close to end the week with all the stuff that's going on, that'll be really positive. If they sell the close, then that'll be what it'll be. But that might be really interesting this afternoon. So here you've got the levels clearly laid out on SPY. Qs. What I've done here yesterday, I had marked 373 as a support shelf. We had a couple candles with fake breakdowns. We broke down below 373. I tried to short that. It did not work. It found support here at 372. So I've moved that down, our support line down to 372 for today. So as long as it holds yesterday's low, I think we're in good shape. I think you can be long against that line. I think I looked pre-market and we're in the 373s somewhere. So anyways, I would be concerned on a breakdown below 372. And here you can see from yesterday, you can see the wicks of these three candles. If you can see that there, that reached down below 373 and reached down to this 372 and then was able to bounce. And actually, I was thinking to myself when I was holding that short, I didn't hold it for very long, enough to just, lose a little bit of money instead of a lot of money. I've kind of learned over the years, don't be stubborn. If it's not working, get out and reset. So when I saw that 373 fail, but then there really wasn't any follow-up selling, it was just really just kind of meandering underneath 373. I was thinking to myself, that's not what you should see on a breakdown into a big trading void here that we pointed out yesterday. And remember, this bar wasn't here yesterday because that's why we had put support at 373. So this bar emerged yesterday with all of this trading here and here at the end of the day. So just one of those things. The market did not want to give way, and that's bullish in and of itself. So today, just key off at 372. We kind of beat this IW IWM thing to death yesterday. We talked about catching the bulk of this run up right into 224 on Wednesday, where we said close out your longs, take profits. And if you're a sharpshooter and not falling asleep congratulating yourself, that would have been a very objective short right there. And if you did that, there was absolutely no reason to get out of it yesterday. No, big shakeout candles or anything like that. So today, you just key off of yesterday's closing low right here at 220. So big run up, some corrective action. Maybe that's it and they bounce it, or maybe they take it down to 218. We'll have to see. But the levels couldn't be any more clear on IWM, because you can see all of these levels where we've had reactions and we've got a gap. So those are very clear levels to trade against. We're right here at 220. If 220 fails, I'd expect a move down to 218. And what you can do is put on your fib retracements, and just eyeballing that looks like about a 50% half-back retracement where you would expect a bounce. Moving on to Facebook, soggy trading. We got to 368 and we pulled back to the original gap level here at 364. So key off of that. That's your clear pivot. Anything above 364 keeps this 369 open, and then 373 for a gap fill. If we drop below, then my expectation would be 358. We've seen all this trading in here. You can see here was support, 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 resistance, resistance, resistance. So 358 is an important level there on Facebook if it were to drop out of this area here. Apple, same thing, soggy. We talked about yesterday 148.50 being the pivot. It lost it, just chopping down here. Found 147.50 as support. Like everything, I think it's bouncing up a little this morning. I think as long as you hold 147.50, bulls are fine. If this morning, if you're trading it and you recapture 148.50 from below, that would be your entry point. So moving up from the bottom, 148.50, and then 149.50 would be your buy points if this is going to have an up cycle now and try to press towards the high. That could come today or come next week, or always keeping an open mind. It could, drop down if things get bearish. But 147.5 is the line you got to hold if you're bullish. And here's Tesla. Like all of them, just trading down a little bit yesterday. I've left this old gap between 705 and 715 filled, but the levels remain important, so that's why I've left it in there. Sitting here at 700, that's a clear pivot point. Why? Support, 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 support. So that's a clear line. Bulls can or want to see price hold that level, and then 705 and 715 would be buy points, and 720 would be a buy point entering back into this gap area. On the downside, you drop below 700, you're probably going to move to 690 pretty quick, and then 690 down to 670. So these levels keep interplaying with one another, and it's just level to level trading. What is difficult with a name like Tesla is the implied volatility is high in the options. They're on the expensive side. And when you get these days where it moves, $5, $8, it's really hard to make money. You've almost got to be in a trade like this unless you catch, one of these moves, then you can make a lot of money. But when you're in this little environment here, really choppy trading, I mean, if you've tried it, you know how frustrating that is, where you're in a position and you're fighting time decay on a weekly option and it's just not moving. So, and it's hard to tell. You never know when a move is going to turn into a bigger move. So you either got to be trading it or not trading it. So, and remember today, I just thought of this, Friday is Lotto Friday, and with Jerome Powell talking, it might be Lotto Friday with a kicker, right? We've got some extra potential turbo juice with whatever Powell says. So be aware of that, and if that's your thing, just be ready to go on the names that you like to trade. If you're, an active trader on a Friday, there may be a little booster shot there with whatever Powell might have to say. I've been really disappointed in Microsoft. I actually did try a trade somewhere in here, probably being long against 302. I can't remember exactly, but earlier this week, I really thought 302 would hold, but now it's just kind of bleeding out, really in no man's land here. I think you either got to come down, either hold or fill the gap, or recapture 302. Now, I think that would be a nice trade if you want to be involved in Microsoft, and that would be recapturing 302 on the upside, and then your target would be 305. So that might be a lot to ask on a Friday before the weekend and everything, but it's possible. Or if this thing comes back and fills this gap, that would be a place for a long. And also, I mean, the big super duper bazooka level would be a complete back test of the breakout. Remember here at 294, 294.50 was the breakout. And so if this was a breakout and a back test, that would be a place where if you wanted to be involved in Microsoft, you just take a full position there and then set your stop just below, because you complete that very common technical move of breaking out and back testing and then going. But there's some more downside if it's going to do that first. Amazon, 3,300 remains the pivot. Made a little move yesterday, came up $20, came back. There's really nothing in here to really shoot against. I think if you want to be long, you get that long either against 3,300 or you get long against a low of the day or the open, depending on if it looks like it's going to be, a green opening bar. You can get long against the opening low and then see if you get a run up to 33.75. That's going to be your first target on the upside. Google, relatively nice day, down about 0.4, but it respected the levels really, really well. It's right here at 26, 26.28 right here where I've got that line. I think you can be long against that level. If you drop down below, probably going to come down to 2,800, which is the bottom of this flag here. So, but with the market green this morning, unless there's some big news after Powell, my expectation is for this, 28.30 to hold. Google's been in one of the has been one of the strongest stocks in the market, one of the strongest within the FATMAAN complex. It either consolidates or goes up. It's been a long time since Google has been in either a soggy or a downtrend type posture. So I think you got to continue to lean on the long side and look to buy dips. Like for instance, if this came back here to 2,800, I think you're looking for a long there. And if you get stopped out, that's trading. Then look to make a buy back here at 27.60, back testing this consolidation range. Netflix, soggy trading. You've got 550, 550, 250, 555, and then you've got 560 as the big resistance level, top of the trading range on the daily chart. And that's where, if you're a position or daily time frame type of trader, I think you'd want to be long Netflix on a breakout above 560. And if you're at all interested in that, the projected measured move is $90 out of the big trading range. So that's a place where you could anchor along and sit in for quite a number of weeks, I would imagine, to see if that $90 measured move target is achieved. So those are the levels on Netflix. Semiconductors, just kind of thrashing around, back up near this breakout level, 268. Yesterday we saw that soggy trading where it traded down to 265 support level, and that held. So if you're actively trading that, that was a great entry point, because if you look closely, you can see three candles that reached down to 265, and all of them held. So you would have gotten nice, what amounts to a $3 bounce on most of these candles, back up to 268. So if you were looking to be long, I would be long on a breakout above 268 or on a pullback to 265. Those are two places where you could anchor your long and then set your stops below. So let's recap real quick. We got Jerome Powell and consumer sentiment at 10. Those both have the potential to move the markets. We've got Friday lotto potential, with Jerome Powell being the kicker factor. Could be more outsized than normal today. So if you're interested in that, get your ducks in a row pre-market and be ready to go at 10 o'clock when Powell starts speaking. And then don't forget, we've got probably higher than normal weekend risk with the geopolitical stuff. Double check all your positions heading into the close for not only positions that you've forgotten about with weekly options expiring today, but also decide where you want to be with weekend risk, probably slightly elevated with all the stuff going on in Afghanistan, and then get everything kind of tuned up, as far as your portfolio goes. And then don't forget, We've got HIBB Sports reporting this morning in the sports apparel category with Dick's and Academy Sports, both with very constructive charts. You've got Academy Sports breaking out. You've got Dick's with a big gap up and bracket trade setup that could either turn into a big gap and go or a backfill of a sizable gap. But either way, that's going to be a really, really nice trade. So check out those tickers. And then you've got Big Five as a laggard in the group. If you're interested in a potential catch-up trade, to keep that one at least on the radar if that starts to accelerate. So have a good day of trading. Stay on your toes for Powell. Let's see what he does and see how the market reacts. And also, if I don't talk to you later today, have a great weekend. And I will talk to you next time. This has been Chris Buss with Trader's Profit Compass.